Joining us now for more on AI's road ahead, George Lee. He's the co-head of the Goldman Sachs Global Institute. It's nice to see you. Welcome to our program.
You too, Scott. Great to be here.
I feel like Jensen set this up perfectly for my first question to you, which is, where are we in the AI cycle?
Yeah. I mean, first of all, it's great to hear Jensen. First, it's great to have him at the conference, but to hear that sense of wonder and excitement that he brings to leading, what is arguably the most important company in this revolution, I just think it's inherently exciting, and the buzz after his presentation was terrific. So where are we? Like, the national anthem is finished, but we're in the very early innings. And I would emphasize this is a nascent technology, and Jensen mentioned this in his remarks. It's a new form of computation. And so that new paradigm takes a while to make its way into consumer habits, and more importantly, it takes a while to make its way into the enterprise. So enterprise adoption, enterprise readiness, it's going to be a slower burn. But make no mistake, this is an exciting era, a brand new paradigm for the way that we experience computation as humans.
On that note, I looked back at a conversation you had in the spring with Tony Pasquarello, colleague, of course, of yours, very well known to our viewers because he comes on our program. And you said the following, and I want to bring this up again. You said, quote, "The degree to which this technology just dropped on the face of the earth and seemed immediately consequential to people is quite unusual. And that degree of unanimity is building up rather than dissipating." Now, you could take that one of two ways. I mean, you could say, well, that's incredibly bullish, or you can say, wow, everybody's on the same side of the same boat.
Right.
How should we take it?
Yeah, it's a great question. Per my comments, it is fascinating in the sense that there was this moment, November 30th, 2022, where the public at large got a sense of accessing and having a conversation with a machine. It was like a fundamentally new way to think about computation. And it attracted an enormous amount of attention. And yeah, I think the unanimity, the confidence that this is going to be transformative for businesses, for nation states, for our world, continues to build. That having been said, I think there's a healthy debate that's going on, a set of divergent views about how fast this is going to happen, whether or not the scaling laws persist into perpetuity, what bottlenecks and constraints we're going to face, the data wall that people are talking about. So I'm actually encouraged that while the enthusiasm's building, there's an enormous amount of investment, obviously, there's also a good two-sided market about the pace, timing, and ultimate scale of impact of this technology. I think that's healthy.
The keynote speech by NVIDIA CEO Jensen Huang and Goldman Sachs CEO David Solomon, who covered the AI sector in great detail, was one of the highlights of the conference. When Huang was asked about the recent U.S. export restrictions on chips to China and the potential impact of rising geopolitical tensions on chip supplies, he explained that his company was certain that chip supply would continue even if it would not be as good if Taiwan Semiconductor Manufacturing Company, the Taiwan-based company that leads NVIDIA in the supply of advanced AI chips, was endangered. Huang emphasized that in the event that it became necessary, NVIDIA has sufficient intellectual property to move chip manufacturing from one facility to another. Considering that it released third-quarter forecast statistics that sparked concerns about slower earnings growth, NVIDIA has lost more than 15% of its market value. Concerns were raised in particular regarding the hyperscaler concentration in the NVIDIA business model, since 4 sizable clients accounted for almost half of the company's revenue during the AI boom. Toshiya Hari, a semiconductor analyst at Goldman Sachs, reaffirmed his buy rating on the stock after Huang's appearance at the conference. Hari believes that the company will see an increase in sales in the upcoming months as demand for accelerated computing continues to be extremely strong and has expanded to include enterprise and sovereign states. NVIDIA offers solutions for networking, computing, and graphics. Earlier this month, the company's CEO, Jensen Huang, gave a speech at the Goldman Sachs 2024 Communicopia and Technology Conference. In it, he emphasized the significance of NVIDIA to the AI revolution and claimed that the hardware the company produced was generating enormous profits for the businesses that used it. According to Huang, the AI infrastructure was placed in the cloud by infrastructure players such as his company and all cloud service providers, allowing developers to use the computers to train and optimize their AI models. He pointed out that a cloud service provider could rent $5 worth of NVIDIA for every dollar they spent with the company. Huang also emphasized that software engineers were no longer writing every single piece of code. Rather, he projected a time when each person at NVIDIA Corporation, which currently employs about 32,000 people, would receive an additional 100 times as many digital engineers. He asserted that the first $1 trillion worth of data centers would accelerate and create generative AI, a new class of software that was more than just a tool, but also a skill. Overall, Goldman Sachs lists NVIDIA as the top stock to purchase in the hottest AI space. If you want to keep up with NVIDIA's latest updates and keep up with the stock market latest news, you can subscribe to our investing tutorial channel as we post daily updates about the biggest changes and catalysts in the market. So click the subscribe button if you don't want to miss the newest market updates. Now back to today's video.
Let me get your take on one big theme that played out this earnings season, which was big tech was spending on AI, but investors had some new questions, right? I mean, you did hear that kind of bubbling up. Where is the actual return on all this AI investment? How are you thinking through that dynamic, Dan?
Yeah, look, Josh, you obviously know tech, as well as anyone. I think we're in between this sort of CapEx massive tidal wave and where you've actually seen the numbers come out where you're going to see the monetization from a software perspective. You've seen it in Microsoft, seen it in Oracle, seen it in Palantir, ServiceNow. But the second, third, fourth derivatives, all of our checks are showing when we go into December, you go into March, you go into June in 25, that's where I think numbers come up significantly higher. And I think that's where, even though we've seen some sort of soft spots, obviously with Salesforce a few quarters ago and others, I believe this is just an air pocket. And ultimately, we're going to see numbers go a lot higher for software.
Dan, are there any macroeconomic risks, though, that you are a bit worried about? You're viewing rate cuts as a bullish move or a bullish sign here for tech, but just more broadly speaking, that risk of recession is still not going anywhere, right? Some on Wall Street are still worried about that. Are there any macroeconomic factors that you're closely watching?
The bears have been worried about recession the last 2 years, while tech's just continued to rip higher. And they'll come out of hibernation mode here and there over the coming months. You got the election, of course, in terms of some of the risks, but it just, as we talked about, this is a fourth industrial revolution. And that's not changing if it's 25, it was 50 bips. It's not changing regardless who's going to be president. This is an unprecedented tech spending environment. Fed cutting, I believe, just makes it more of an autobahn in terms of what we're seeing for tech. I'm not saying everyone's going to benefit, but in terms of the AI revolution, the winners, that's why I believe over the next 3 to 6 months, we're looking at NASDAQ 20,000.
Dan.
In a recent interview with CNBC, Sam Stovall, chief investment strategist at CFRA Research, stated that, on average, the market has gained almost 18% between the first rate decrease and the last rate hike since 1990. However, the market often did little more than 0.5% in the 30 days following the initial rate cut. Stovall brought out yet another crucial historical fact about election years. According to him, September and October are typically weak months for the stock market during election years. But as the uncertainty around the election fades, November and December are when markets often recover. Investors should position themselves for a post-election bounce, the analyst advised, since he believes this would support growth equities. In a recent report, New Street Research expressed optimism about NVIDIA and stated that there is no sign of a slowing in the market for AI infrastructure. According to the company, NVIDIA's GPU's full-stack and system-scale integration capabilities give it a significant advantage over rivals like AMD. These provide higher bandwidth interconnectivity between chips over a broader span. When comparing NVIDIA and AMD, Pierre Ferragu, an analyst at New Street Research, stated that while AMD's architecture is less flexible and scalable, it can still be competitive, but only for a considerably smaller range of use cases and at the expense of concentrated optimization efforts. NVIDIA's losses following the most recent quarter's earnings were mostly anticipated in the wake of management-confirmed Blackwell delay reports. However, a modification to the Blackwell GPU mask was the primary cause of the delays. Analysts say that doesn't change the chip's primary functioning logic or design. Although Blackwell has been postponed for a few months, this does not alter NVIDIA's fundamental growth premise. Naturally, NVIDIA won't control the whole $2 trillion market, as it will have to contend with rivals like AMD and in-house AI accelerators made by Google, Amazon, and even Apple. According to some forecasts, NVIDIA will lead the data center industry with a market share of over $950 billion between 2025 and 2029. Less than half of the overall market. So what does this really mean for NVIDIA's stock? Let's find out, but first, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button, subscribe to the channel.
Dan, you just mentioned the fact that you were over in Egypt. I'm curious what you've learned from a supply chain standpoint. And when you talk about the fact that this is a risk-on trade right now and you're confident of tech's move higher, I'm curious, because of that rate cut, are there any specific sectors or areas within tech that you think are poised to benefit the most?
Yeah, I mean, demand's outstripping supply 15-1 from a chip perspective. It's actually incrementally more bullish than even a few months ago when we were in Asia because of enterprise demand. And look, NVIDIA is the only game in town now, but the use cases are exploding. That's bullish for hyperscalers. You look at Microsoft, Google, of course, Amazon. And I think it just shows this is about $1 trillion of incremental AI CapEx over the next 3 to 4 years. Big tech's leading it. The sovereigns ultimately will get it from a government perspective and other enterprise. And that's why I view it. This is still 9 p.m. in the AI party that goes to 4 a.m.
The Federal Reserve's 50 basis point rate decrease, according to tech bulls Wedbush, has given the AI revolution trade more traction, indicating a risk-on environment for big tech and AI companies. Wedbush claims that this drastic decrease, along with a dovish dot plot through 2025, creates an extremely bullish environment for the tech industry. This is a big change because a lot of investors have been waiting for the go-ahead to start investing heavily in tech growth stocks by 2025. Wedbush points out that the technology industry as a whole has demonstrated resiliency, as evidenced by recent earnings, such as those from Oracle, which confirm that the AI revolution is transitioning into its software and use case phase. Their recent studies in Asia indicate that the tech supply chain is getting ready for significant expansion, propelled by projected capital expenditures of $1 trillion in AI over the next several years. With its GPUs dubbed the new oil and gold of the IT industry, NVIDIA continues to play a pivotal role in this transition. According to Wedbush's estimation, every $1 invested in NVIDIA processors generates a $8-10 multiplier in the larger tech industry. Although NVIDIA is at the forefront, major players in the computer industry, including Apple, Microsoft, Oracle, Palantir, AMD, and Palantir, are all embracing AI. Instead of being a speculative bubble like the one in 1999, the company views the AI boom as more analogous to the early internet days in 1995. Wedbush continues to maintain an optimistic view for tech stocks, predicting continued gains through 2025. With the Federal Reserve's rate-cutting cycle now underway and tech expenditure on AI only starting to ramp up.